We're seeing Asia definitely open up on the back foot. It is off session lows, I have to point out, but the cuts are still pretty deep.
Credit Suisse for the Swiss government is large enough for it to be backstopped by the government. So I don't really think that you are going to see a failure of that.
Basically, the market conditions have to be conducive. And towards that, we continue to work. We are reasonably confident that this should occur in next couple of months.
This morning, we got the news that ADIA has invested about $500 million in Lenskart. That values Lenskart around $4.2 billion.
The broader market is still under pressure. The mid-cap index is down 60 points. Now the Nifty is falling, down about 25 odd points.
Every time the Fed hits the brakes, something goes through the windshield. And that's exactly what we're seeing right now. You have a series of embedded risks that have piled up in global markets.
Today morning in the block deal window, you saw almost 3.7% of the total equity change hands, and this happened in that particular window, like we mentioned.
Today, there's a lot of move towards FMCG and consumer stocks, the perceived safe havens of the market.
Stocks are trading at near decadal low in terms of valuations. BPCL at about 1.3 times, IOCL at about 0.8 times.
Tanup Bagchi, who's currently the ED at ICICI Bank, and has been appointed as the next MD and CEO at ICICI Prudential Life Insurance.
We have the Nifty, which is up around 17 odd points. But remember, it's been a tight range. It's been volatile within that range.
You're with us here on a fresh new edition of Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me in the newsroom, my colleague Surbi. And joining us from the newsroom floor is Mangalam. Guys, hi. Good afternoon. And we are starting on a pretty good note, I have to say. At the day's high. Actually, I'll come to the Indian market in a bit, but let's address global markets first because that's the more important bit, right? And it's good news. It's all good news so far. The big epicenter of the crisis, which is Credit Suisse, that stock is trading up to, at least the last time I checked, over 20%, was actually about 25% higher, started 40% higher. And that is the big one, which was troubling markets. I looked at a big measure of European banks. That is up of almost 3% or so. That is point number 2. We had 2 statements, I think, which have stabilized sentiment a little bit. One was, of course, not a statement, but the action of Swiss National Bank lending to Credit Suisse, or rather Credit Suisse borrowing those $54 billion or so from the National Bank, the Swiss Central Bank. I mean, it's not about, the amount borrowed, because it's not clear whether they even need the money. This more seems like a statement of intent from the central bank, the Swiss Central Bank, that we will backstop the situation come what may. At least that's the way I read it. The second is the Saudi National Bank, again SNB, but this is the Saudi National Bank chief, in a way walking back on his comments from yesterday. That interview is what really started the panic yesterday. He basically said that we will not invest more in Credit Suisse. But then, that is the portion of the interview which got highlighted. He went on to say we will not invest more because we don't want to be in violation of the rules. And that completely got sidelined in the general panic that we were seeing yesterday. And today we have an interview to our sort of global network, CNBC, in which he's clarified that, this is not what I meant. And I think that has also soothed sentiment. He's also said some positive things about Credit Suisse, in which they hold a meaningful chunk already. And of course, apart from this, there are no fresh headlines, at least nothing which indicates trouble. We are in the third bounce on the Nifty, third bounce of the day, and we are trading at almost at the day's highest point. So the bounces are being sold into, but I would kind of say that a bounce is due. I mean, this is a bounce, but this is nothing, right? I mean, we've lost about 800 points in the last 4 sessions, so a more meaningful bounce is due. But if you're trading, and I said this yesterday as well, you need the Nifty to trade above the short-term reversal level, which is 17,220, which is still some distance away, and that is where I guess there'll be more selling pressure which starts to come in. Only above that, I think, at least in the short term, you're going to see a bit of a trend reversal. But it's been intensified sort of selling over the last couple of sessions, and a bounce cannot be ruled out. We are, I think, just perhaps, starting to see the first signs of that. Surabhi.
Hi, Prashant. Good afternoon. I don't want to be the party spoiler here, but I can't help but point out that it's also the weekly expiry.
Yeah.
And this market has been so heavily short. I mean, the FI long short positions are at sort of, the extreme end of bearishness. And it was almost a given that at some point, some of these shorts have to cover. They were just looking for that excuse to come in. Which was the news, as you pointed out, European markets stabilizing and these additional clarifications coming in from the Saudi National Bank saying that, look, we are at 10%, can't go above 10%. It's a regulatory thing. And that Credit Suisse itself never came out and asked for assistance. That word kind of rattled people yesterday. So the Saudis are saying that they never asked for assistance to begin with. Anyway, the point is that banks are seeing a big move as we speak, and a lot of that would be some of the short covering, perhaps HDFC Bank, SBI. So a lot of the gains are coming in from these stocks. There is a little bit of buying on a TCS as well. That's quite evident. But today's other big trade has been this move to consumer stocks. And Mangalam and I were discussing that in our digital segment just a while back. A lot of these names, Asian Paints, HUL, quite a few of them, Britannia, all on the upside. Of course, you'll hear more on Titan as the show goes along. But that's the other part of the market that's looking good. Even metals have paired off the losses. So if you had seen stocks like Vedanta, Hindalco, Nalco in the morning, then the screen was extremely weak. Now even those stocks are not down as much. The metal index is trying to make a bit of a comeback, though of course this is the weakest part of the market. Mid caps, not too bad, just about a 0.4% kind of an up move on the mid caps. The breadth is still quite negative. There's no taking away from that. Just to point out some of the major movers and shakers today in terms of stocks moving on news, just two come to my mind. One is Patanjali, because of what happened. Exchanges decided to freeze off the promoters' shareholding. Again, there's a regulatory issue over there. They're not meeting the minimum public shareholding norms. That stock was down. And the other one was the Motherson because of a block trade that happened. So two stocks that stick to my mind in terms of news. But otherwise, Mangalam, I mean, what would you say? I guess everyone's waiting to see whether these gains can be held on to.
Yes, that is true. If you looked at the market over the last few trading sessions, you would have seen that it's the second half, sometime around this time itself, where we get the European markets opened, and there is a fair amount of declines out there, and that reflects in our market too. But today, the European markets have opened well, like Prashant spoke about, Credit Suisse, etc. And that means that those who were bearish on our indices have been caught on the wrong side, as a result of which we've seen a near 200-point recovery. The question is whether this sustains or not. It is weekly options expiry. We have seen a fair amount of writing at the 17,000 and 17,050 calls. There is a fair amount of open interest still outstanding out there. So if the market sustains between 17,000 and 17,050 for the next 15-20 minutes or so, we could see an up move at 3 p.m. and that could lead to further short squeeze or not. But, from the levels which we bounced today, 16,850 is an important one as well. Why do I say that? Well, because 16,850 is very close to the September 2022 lows of 16,750 from where we bounced back. And this was also the start of the decoupling for the Indian markets as compared to the global markets. After September 30th low of 16,750, we saw a rally of 13% in October as well as November. And on December 1st, we hit a fresh all-time high of 18,887. From there, we've corrected about 10% on the Nifty, and the 10% mark, which is 16,998 thereabouts, is usually seen as a big support area for our markets as well. So we are bouncing off supports. The question is whether this sustains or not. The mid-cap is doing well. We have seen some writing at the 17,000 put as well. Bulls believe that now that we've climbed this mountain of 17,000 at least for today, will it sustain all the way into the expiry session or not? If it does, then there is room for further short squeeze as well. Back to you.
Okay, all right. So let's see how some of these events play out. Here's the lineup, and it's a packed 60 minutes ahead. ICICI Prudential Life picks Anup Bagchi as the new MD and CEO for the company. Bagchi will take charge from current MD and CEO NS Kannan in June. The street cheers the leadership change. Trade adjustments for FTSE and Bharat 22 indices will come into effect from tomorrow. All the details coming up. Zee Entertainment surges in trade as Bloomberg reports that the company is set to repay IndusInd Bank $10 million. More details on this in just a bit. We'll, of course, discuss the top portfolio calls with our alpha manager of the day, Rupesh Patel of Nippon India Mutual Fund joins in. All this and much more over the next 1 hour.
All right, let's get Mitesh in then and ask him whether this will last, this bounce. Mitesh, people are waiting to sell the bounce. It's very clear in the price action. Let's just see the screen. But what's your own sense? And what should one do really? Because I think it's well understood that at some point we will get that bounce, but how should you trade it?
One, I think it's 11 rand. Very clearly, it's a market, which is, as Mangala was highlighting, as we've been also discussing, and I think in the morning show you also highlighted, the 16,800 zone, broadly given 50 points, is a very strong support area. Now we've hit that, we've had a bounce back, but do we have signs of reversal as yet? No. So we're not trading the markets. But, my initial feeling is that we might actually just test these levels, 16,800, maybe, a couple of times. Some base building is required for a sustainable bounce back to happen. So on the upside, till we cross 17,150, not turning positive till we break 16,800, not turning negative. So I think it's a market which is slightly somewhere in the middle of that 300, 350 point kind of a range, and therefore not doing something might not be a bad choice. But what possibly traders can explore is some of themes which are playing out in the market, and one of them is the crude theme. I think crude has cooled off very nicely, and the refineries have, I think, started giving strong buy signals on the upside. I think that's where you can possibly look at trading bets. On the index, as I said, I think we'll hold our call. Maybe it does look like that from 16,850 we might go to about 17,175, but I'm not very sure of a immediate movement upwards. It can possibly retest 16,800 first before it moves up again. So given that kind of trajectory, I think I'll stick to stock specific calls. I have in fact a buy on IOC. That's a buy with a stop at about 78.5. Look for targets of around 86 to begin with. And the other one is HPCL. That's a buy as well. Keep a stop at about levels of 237 and look for target of 255.
All right, tanking up on IOC as well as HPCL, but individual stocks are buzzing around, and how we have MedPlus buzzing with a fair amount of volumes. Actually, the stock has corrected about 33% from its highs already, but we have seen some bit of recovery on that one. MedPlus is buzzing with a fair amount of volumes as we speak at the high point of trade with a gain of 8%. The other stock which is also surging is ICICI Prudential Life. After it's got a new boss, Anup Bagchi gets appointed. Yash is here with me in the newsroom. Yash, what's so special about Anup Bagchi?
So, Mangalab, interestingly, when the incumbent MD CEO NS Kannan was appointed at ICICI Prudential Life, he was also the executive director at ICICI Bank, and similar is the case with Anup Bagchi. Of course, the company today has announced that Anup Bagchi will be the next MD and CEO at ICICI Prudential Life Insurance. He'll be taking over on June 19, 2023. June 18th, a day prior, is when the current MD and CEO sort of superannuates his term at ICICI Prudential Life Insurance. Interestingly, the stock is pretty excited with this particular appointment, and there's of course a very important reason to it. Anup Bagchi, in his career since he joined ICICI Bank in 1992, has sort of worked and played a very important role in almost every segment of financial services. He has a management degree from IIM Bangalore, an engineering degree from IIT Kanpur, and if you look at his work, he's worked in retail banking, treasury, investment banking, small scale industry, payment and settlement bank, wealth management business, practically every segment of financial services industry. And this is exactly what ICICI Prudential would need at this point of time when there are so many headwinds ahead of it as far as the regulatory environment itself is concerned. Let's look at some of these headwinds importantly, which will be ahead of Anup Bagchi. Budget announcement on taxing large ticket insurance policies. So of course, growing in that environment, getting chunky premium will be a big challenge. Steering the company through all the regulatory changes which IRDAI has announced, potential entry into the health insurance market once composite license gets approved, that will be keenly watched. If you look at the stock has been flat starting from June 2018 till today, which means the entire tenure of NS Kannan as MD and CEO. High which was made on the stock was about 724. The low was 226 during the COVID time. As far as valuation is concerned, it's one of the cheapest stocks as far as the insurance sector is concerned, trading at 1.4 times FY24 price to embedded value. Compare this to something like an HDFC Life trading at 2.3 times and SBI Life trading at about 2 times FY24 price to embedded value.
All right, got that, Yash. Thank you very much for the details on that one. Well, let's take this conversation forward. We have Devin Choksi of KR Choksi now joining in. Devin, good afternoon. Good to have you on the show. Since we're on the subject, what are your thoughts on some of these insurance plays and maybe iPru? If you've had a look at the company recently, if you could share your thoughts.
Yeah, good afternoon, Sylvie. Well, I think couple of thoughts straight away. Insurance industry, life insurance industry in particular, after the budgetary changes, is going to see a new product launch coming in, wherein I think the saving linked business and the plans would probably give way to the term insurance, the life risk plans. And that is where I think most of the companies will have to rejig their product portfolio. While rejigging the product portfolio, two important aspects to be looked into. One, how effectively you basically rejig the term life insurance plan into a digital format. Because should you term insurance plans, I think they are largely, I think, a voluminous business, and I think where the margins are relatively tight. So in such situation, I think if you distribute it, I think digitally well, then in such case, I think the profit margin remains intact. So that is one point I think which is a challenge for the industry, and I'm sure I think through ICICI also I think would have the similar challenge to look into. The other aspect I think where probably I think one will have to look at in this business is the valuation. Fortunately, I think the corrected prices in the market has brought down the embedded value, and I think as a result, embedded value valuation. I think as a result of which, I guess I think most of these companies are no more expensive as they used to be earlier. So that makes I think life relatively more easy. But I think in next 3-6 months, we'll have to see how the new product launches takes place and how exactly the companies are positioning themselves into this space.
All right, Devin, just hang in there. We'll get your thoughts on a bunch of other stocks which are moving around as well. But one of them is Zee, which is at closer to the higher end of today's trading session. And this, after we got reports that the company has actually gone ahead and settled with IndusInd Bank by paying them. This is important primarily because over the last few days, if you see, they have gone ahead and made settlements as well. One of them, of course, was with the Performance Rights Institution Society as well, over 100 odd crores, 211 odd crores there. This is in line with the company's timeline as well. March 31st is when they have the NCLT meeting to discuss the merger with Sony. And before that, on March 29th itself, we have the NCLAT meeting on the order that was passed, against the NCLT when IndusInd Bank took them to the Insolvency and Bankruptcy Code. However, that becomes a non-event provided IndusInd Bank has been paid off by Zee. But the big point is that it paves the way for a merger, and once that happens, we see value unlocking. I mean, brokerage reports cite the value of Zee to be around 16 times one-year forward earnings at the base case. They've accounted for the delay in merger. They've accounted for lower ad revenue growth as well, given the macro uncertainty. Given all these things, the stock at around 15-16 times for the largest media company in the country. Do you think this warrants another look after the underperformance? Because it's been flattering to deceive for multiple times in the past. Is this the real thing?
Well, I would think that yes, I think the valuations have come down. So the downside risk in the particular business, I think, has definitely come down. And as you were highlighting, the merger is the key. The merger would probably build further amount of valuation possibilities going forward, because largely the sports events, I think, which would possibly take the shape out of this particular merger largely, which I would think that I think would result into better profits and profitability for the merged entity. So from that perspective, I totally I totally agree with that point of view that the corrected prices are probably better as far as entry into this particular business is concerned, and the downside risk is limited, literally limited at this point of time.
No, 60 points, by the way. This is a battle going on. Who'll the bounce sustain, or it'll get sold into like it has now for the last 3 days. Devin, any thoughts very near term? Will we hit 16,850, which is the low today, and then we are having a little bit of a up moment. Will this last? And if you were trading, would you buy? I know you're not, but what's your sense, given the magnitude of the fall?
I think the fall has been quite sharp, and the valuations in respective counters have been quite attractive than what they were before. And without too many fundamental changes happening into the outlook of the businesses in most of the listed company space, including some of the larger ones which have got punished because of the exit of some of the traded funds from the India market. As a result of which, I think these valuations have become attractive. In my viewpoint, I think any fall in this valuation is definitely, I think, a good buy opportunity. Even at corrected falls currently, I guess I think the valuations are attractive. So maybe selectively one can start buying into. with the fact that I think another 1 or 2, the pain may be left, because I think some of the funds who may have started exiting, they may complete the process of exiting in the next 1 or 2 months. I think that is an expectation. And on the other side, I think if the market starts getting some amount of support, then probably I think the long traders who are stuck with their position, they may also come and sell their position at a relatively better market eventually. So these 1 or 2 months are likely to be, I think, the opportunity months as far as investors are concerned. For them, I think this time should be better to buy into some of the quality stocks.
All right, Devin, got that. Stay on. We'll have more questions for you on the other side. We do have to take a very quick break. On the other side, we'll also discuss some of the portfolio calls with our alpha manager of the day, Rupesh Patel of Nippon India Mutual Fund will join in. Welcome back. Well, we have a couple of index changes that will come into play starting tomorrow, and we're talking about the FTSE as well as the Bharat 22 indices, I think. Let's bring in Vivek. He's the man who keeps a track of a lot of these developments very, very carefully. Vivek, tell us, which are these indices? Who goes in, out? What's the impact?
Well, tomorrow is going to be an important day, as far as these passive funds are concerned, because they are the ones who closely track these indices and have to track these movements, as per the changes made, both inclusions, exclusions, as well as the weight changes. So first, let's have a look at the Bharat 22 ETF. There are no inclusions or exclusions, but a couple of weight changes that will be seen. So NTPC, NALCO, and Power Grid will be the stocks in focus. Expect, in NTPC flows of close to $35 million, in NALCO around $30 million, imported almost 2.5 times ADV. And Power Grid around $18 million of inflow. On the other hand, ITC expected to see a slightly substantial outflow of close to $70 million. All of these numbers are as per analyst estimates. But more importantly, tomorrow will be the adjustment as far as the FTSE indices are concerned. Remember, the changes were announced on February of 17, and tomorrow is the day in which the adjustments will be done. And it's a net inflow event as far as FI flows are concerned for India. Inflows of close to $380 to $400 million is what analysts are estimating. Now, some of the top stocks that will see inflows: Kotak Mahindra Bank, close to $78 to $80 million. Supreme Industries, APL, Apollo Tubes, Patanjali Foods, and Solar Industries are the top stocks that will see, a significant impact as far as the ADV is concerned. Now, also remember, the stock that saw a very large block deal, Sona BLW, where Blackstone exited 20% stake, that stock too sees a weight up in tomorrow's trading session, inflows of close to $25 million over there. On the other hand, Gillette as well as Eris Life Sciences will be excluded from the FTSE indices.
Okay, got that. Thanks very much. So lots of movers and shakers in the back of those index changes. Thank you, Vivek, for that. Devin, among all the stocks that Vivek mentioned, I just want to talk to you about the power names. He's told us that Power Grid and NTPC will see a slight weight increase in the Bharat 22. Aside of this event, there's a lot of other positive news flow. We're expecting peak power demand. A lot of these, even the thermal plants have been told to fire at full capacity. Your thoughts? Would you look at, putting any money to work in the power space? And what part of the chain would you go to then? Generation, transmission, where?
So I think generation and transmission comparison, I would think that all the companies which you mentioned, including NTPC and Power Grid both, I feel that the valuations wise, they are definitely available at probably the bottom levels of valuation. So downside possibly is limited in this case. And should the weight increases in the ETF, then in such case the buying would emerge into this counter. So that should remain technically positive as far as the stock price is concerned in the counter. Overall, the argument for buying them into the portfolio, definitely is favorable. However, we believe that public sector companies, the immediate follow-up as far as the investors are concerned, is not there. And as a result of which, the investors may not get very handsome return out of it. I would rather think that current market price, the corrections in the likes of Reliance and other companies, I would think that they would be offering better opportunity, probably when the market starts rising. for getting the return out of investment is concerned. So would stay with some of the larger names like Reliance vis-a-vis others in PSUs.
Right, when the market starts rising is the big question, right? Because as soon as it saw a bit of a recovery, that's been swiftly sold into rather. In fact, we're virtually at, back in the red once again, holding on to the gains with just around 4.5 points on the Nifty, 16,976, back below that 17,000 mark. So we'll keep an eye out on how this pans out as we approach 3 as well. Just wanted your thoughts on two sectors from opposite ends of the spectrum, valuation spectrum, both of them doing well. One is FMCG, doing well in today's trading session. And the second is all the, oil marketing companies. They're at decadal lows in terms of valuation, lower oil prices, everyone's betting on them. FMCG companies, they're doing well, but they're far from decadal lows in terms of valuation.
Coming to FMCG first, I think fortunately the input cost has come under control, and as a result of which earlier the margin impact which was seen is possibly receding away, as I would put it. So from that perspective, I think we are definitely having relatively a sigh of relief as far as I think the margin aspect is concerned. And fortunately for India, I think the purchasing power has not come down for the retail. As a result of which, I think the FMCG products are facing the regular demand situation, which otherwise I think would probably be doubted. But I think that's not the case. And given the fact that I think the market is uncertain, I think people would like to park money into the likes of HUL for sure. And that is where probably I think you're seeing the portfolio shift also taking place in current times. So the factors are operating in favor as far as I think the FMCG rationale is concerned from investment point of view. OMCs definitely, I think the fall in the crude oil prices is, and if it sustains, I would rather put I think the underlying fact that if it sustains, then possibly it's a good time for OMCs, considering the fact that I think this year is going to be full of elections in every state. The fallen crude oil prices, I think, would ensure relatively better margins and the protection for the OMCs. So I would rather like to bet on that particular aspect. But again, buying with confidence doesn't arise here. Maybe I think the recovery in the stock prices, they can happen because of this impact.
Okay, Devin, thanks very much. Good speaking with you. Appreciate you joining in with that perspective. Just 7 points now, 8 points, 16,981. So just completely sold into. The low was was made at 16,850 or so. And from there, the market saw a big bounce, 200-point bounce, then a sell-off, then a rally. And this is, I think, the third or the fourth sell-off that we are seeing. And we still have, 30-35 minutes to go for close. Rupesh Patel is with us, Senior Fund Manager at Nippon India Mutual Fund. Rupesh, good to have you with us here. Rupesh, of course, runs the Nippon India Growth Fund. Rupesh, tell us a little bit about what you're making of the market conditions right now. Last we spoke to you, you said you were very bullish and very overweight on banks. It shows up in your portfolio as well. That space has also suffered a little bit. Maybe just sentiment-wise, it's taken a bit of a knock. What are you doing right now?
Yeah, thanks. Thank you so much for having me on the show. Yes, your observation is absolutely right that banking is a sector where we had overweight positions and we continue to have overweight position. Now, in the near term, we have seen that on account of whatever is happening to banks in developed world, the news flow has been negative, and we have seen in sympathy even Indian financial services, so banks and NBFCs are seeing some kind of selling. Our view is that on near-term basis, I mean, India cannot remain isolated when these risks are playing out in the global markets. But if we step back and try to look at it more from a medium to longer term point of view, I think fundamentals for banks, I mean, today, whether you look at it in terms of growth, whether you look at it in terms of their margins or look at it in terms of credit costs, I think we are seeing one of the best fundamentals, time when fundamentals are amongst the best in last few years. And valuations are also, not very expensive considering where markets are and uncertainty is. So I know near term, these uncertainties are there, prices can correct. But we have seen it, multiple times that when such global events happen, first, like there is always correction, but eventually over medium to longer term, it's the price which you pay that matters. And considering the fundamentals of Indian banks, I think we are still continuing overweight stance on these entities.
Okay, so continuing an overweight stance. Rupesh, hi, good afternoon. I just want to get your thoughts on, the auto space. And it's stemming from an interesting conversation that we had with Maruti this morning. I want to get your thoughts in, because Maruti has actually gone ahead and admitted, we were talking to Mr. Srivastava, that some of this talk about high interest rates, sticky inflation, it's impacting purchasing power. Anyway, cost of ownership is very high for cars. And people are beginning to, hold back a little bit, and they're seeing some slowdown in inquiries and bookings. That really got my attention. Yeah. Do you like autos right now in any case, looking at the scenario, the valuations? What's your stance on the sector?
So in a way, you have answered the question. So we continue to believe that, if you look at the demand outlook, then we were seeing a K-shaped kind of recovery where demand for entry-level vehicles was weak. And the premiumization wherein high-end SUVs, we were seeing strong demand over there. But if we look at on-the-ground feedback, then there is slowdown over there also. So we believe that inflation, high interest rates to some extent is impacting demand over there. We have underweight stance on auto since some time, and we believe the demand outlook is not very encouraging.
Right. Rupesh, you said that you found some interesting opportunities in the power sector the last time you joined us. Just wanted to know where you stand on that. What kind of stocks are we looking at? Are we looking at legacy power generating companies? Are we looking at new age companies? Are we looking at power ancillaries like, the ones that make power meters, etc.?
So if you look at our holdings in power sector, we have exposure to generators. We have exposure to companies which are play on distribution segment, which offers regulated return and visibility of cash flows. We also have exposure to companies which will benefit from potential transition to renewable energy space, which is happening. And at the same time, we have some exposure in the transmission space as well. So across the spectrum, which includes generation, transmission, and distribution, we have companies which will benefit in these segments. And also companies which will benefit on account of their transitioning from being thermal dependent to more renewable energy dependent place.
Anything, have you added in the current correction, Rupesh? And what exactly if you can...
Yeah. So in terms of exposure, we have recently increased our weight in one of the companies which is a play on distribution as well as transition to renewable energy space. We also have exposure to some power financiers where we believe that valuations are very, very attractive at these levels. And I think, looking at the value of assets, looking at the provisions which they carry, and looking at the outlook on demand.
Power Finance Corporation, Rupesh? That's the name I can...
We cannot get into individual names, but I think some of the companies which will benefit on account of such opportunities which come, we have increased our exposure over there.
Okay. Rupesh, just a wider sort of question. Given that the market has, given ample opportunity, I guess, since the start of the year, nothing's running away in a hurry. Where are you putting more money to work? Just, layer out your top sectors or top themes as you look at the next couple of months.
Yeah, that's a great question, because if we look at it from a very near term, then yes, there are uncertainties. The way inflation and interest rates are playing out, definitely world is slowing down and India cannot remain isolated. So in an environment like this, there is risk to earnings and we have to be mindful of that. So if you think very near term, then there are sectors like something in consumer space where you think that valuations are not too aggressively on the higher side, but the risk to earnings is relatively on the lower side. Or maybe pharma as a space where there are again selected opportunities. or in banking where, again, we believe that risk to earnings is not very high. Those are some of the spaces where we are positioning ourselves to.
Right. You're still not constructive on IT, is it? Because you've been underweight on it. And recently we saw some management changes in one of the top IT companies, management announcement out there. A stock that always, enjoyed relatively comfortable valuations as against others. What are your thoughts? At what point does IT become a value pick for you?
So IT, I think our views are very well known that we have underweight stance, and this stance is there since some time actually. And it has really helped our funds over last 1 year or so in terms of relative outperformance. We believe our thought at that time was that the uptick in demand which we saw in post-COVID environment, this demand is not sustainable. And in a world which is likely to slow down, the risk to demand is very material. And if that plays out, then valuations are on the higher side. As of now, we believe that that risk is very much there. And with the developments happening around banking sector in developed world, there is one more added layer to uncertainty over there. So we believe that valuations, though they have corrected over last 1 year or so, but going ahead, maybe a quarter out, once we get more clarity on what kind of demand outlook is given by these IT services companies, and if valuations also correct, then that could be a point where we would look at, correcting some of the underweights which we have.
All right, we will leave it on that note. Thank you very much, Rupesh, for being with us. We wish you a good rest of the day and we look forward to our next conversation with you. Okay, we'll take a break on that note. On the other side, we will get you a check on what dealing rooms are saying. Nimesh comes in with the D Street chatter and also, of course, some trading calls for the last leg of trade today.
Welcome back. You're watching us here on Closing Bell, live from the CNBC-TV18 Motilal Oswal newsroom. As we speak, the Nifty back in the red, 16,970, shuttling between red and green, the mid-cap index closer to the lower end of today's trading session. So from the newsroom, let's go across to the dealing room. Nimesh, as we know him, joins in. Nimesh, your thoughts, what's happening? I mean, it's just fluttering between red and green.
Well, extremely volatile day of trade, as you rightly pointed out. In the last 10 minutes itself, we've gone green and red maybe 4 or 5 times. But again, the good part is we are off the day's low, and there are some technical supports which have been respected. So that's a good sign. But there is a big sell-off, is what I understand, at a leading FI desk. So the cash volumes are going to be quite high, and there is a basket selling at a leading FI desk, and that's across board, across market caps. So large cap, small cap, mid cap, there is a large list with that long FI. So that's the reason why you see large cash number as well. As I said, 16,800, 16,850 is acting as a very strong support. So that's a good sign that we've reversed from those levels. And that's the reason why some of the risk appetite is also back, is what I understand. So some smart HNIs have participated on the buy side in some select names. That's the overall feedback as well at some HNI desk. In terms of sectors, I guess falling crude is always positive at the margin for us, and that's playing out in many sectors. So OMCs are doing good. The paint companies are doing good, tire companies do well in this environment. So that's one space which is doing good. On the other side, metals are down largely on back of global cues. But even in metals, the feedback is that maybe a small turnaround in the global news, and you will see a sharp short covering as well in the metal names. So that's something which you need to watch out for. Tomorrow there is a bit of a liquidity event to track. We spoke about the FTSE rebalancing as well as Bharat 22. Within FTSE, the big headline to watch will be the $400 million of inflows for India. And for Bharat 22, the stock that I'll be watching out for is ITC, because that stock will see some selling flow. But I guess that's to some extent has been factored in. So that's something to watch, a bit of reversal in ITC after tomorrow's Bharat 22 ETF. So these are things to watch out for from a market point of view tomorrow.
All right, that's about the markets. A bunch of stocks doing extremely well, some not doing well uncharacteristically. What do you have in your kitty for the stocks?
Well, Mangalam, it's a bit of a coincidence that whenever you anchor from your Closing Bell, my first stock turns out to be something that you track very closely. So the first stock today is Warren Beverages. You I think pointed out about Coca-Cola slashing prices, and that's putting pressure. But I believe the other reason for the pressure is there is a buzz of a large block coming in Varun Beverages very soon, and that's the reason why that stock is down 3% in today's trade. The second stock is Piramal Enterprises. There were multiple block deals today, close to 0.5% equity has changed hands, and I believe their leading long only fund, a large FII, was a buyer in today's block. So, and that's the reason why the stock has recovered from the lows in today's trade. So that's the second one. The third stock is Aurobindo Pharma. That's been part of my charter list couple of days back as well. And there is consistent accumulation happening in that stock, and hence even in volatile market and weak markets, that stock stands out on the buying side. So that's been the reason why Aurobindo Pharma has been buzzing in the last few days. And the last stock is Gland Pharma. Again, in Gland, if you look at the chart for this year, the stock is down 22%, been a big underperformer. There were a lot of selling pressure. Now the feedback is large part of the FII selling in Gland Pharma seems to be over, and there is some bit of accumulation now happening at this level. So I think Gland needs to watch out for in terms of delivery volumes and the fact that a big selling pressure is out of the way in Gland Pharma.
All right, got that, Nimesh. Thank you very much for all the action, the buzz, and of course all the stock chatter. By the way, look at the market, and that is just sort of classic sell-on rally that's playing out. We've lost everything, whatever little 30-40 point uptick we had, it's gotten sold into, and this has happened not once but twice today. It happened yesterday as well, and therefore perhaps fair to say that this market is firmly a sell-on rally trade, at least as we speak. So totally flattening out. Good time to bring Mitesh back in. Mitesh, so what's the advice? I mean, do you just keep looking for these bounces and just go out and sell every time you get a 30-point move?
No, Survi, I think we haven't done that today, at least. Kind of missed out the short side of the trade, but then again, it's very old, so it's very difficult, and the risk reward also was not very favorable to take a fresh trade because we already had about 750 points kind of a decline. So missed on that, but that's totally fine. I think on the stock side, I have BTST on Dabur. I think that's reversing very nicely. So BTST here with the stop just below levels of 530. Look for a target of around 545, 546 for tomorrow. And the other one is the DLF, which also is a BTST with a stop at 355 for targets of 366.
All right, Mitesh, thanks a lot for that. We also have Amrish Baliga joining in. Meanwhile, a bunch of stocks, MedPlus, we spoke about it surging at the start of the show, and now it's extended its gains. It's up almost 12% and volumes have picked up on MedPlus as well. As we speak, volumes on MedPlus around 3.5 times what we've seen in the last 10 days. Wonder what's going on out here. Amrish, do you track MedPlus? Your thoughts on MedPlus?
No, in fact, I mean, I found it quite expensive even when the IPO had come, and because of which I have not really tracked it closely. But what I would say is, in case there is a decent rally, possibly investors should utilize that to book out to a certain extent. Because quite a few others are actually, doing something similar, and because of which I think there would be clear competition going ahead, and still the valuations are quite expensive.
Okay, MedPlus, quite the mover today for sure. Amrish, hi, good afternoon. So I'm wondering what you've been doing in this market. The trader is very interesting. A lot of the traders have been telling us that we're out. It's too much. It's too volatile, too choppy. You get, slapped either ways. They're out. Yeah. What about investors? Are you buying?
Investors, I think it's a great time to start buying. And in fact, for a while, I've been talking of levels of 17,000 is what we should see. And currently, we are at those levels. So surely you should start buying at the current levels. But I'm not saying this is the bottom because with, so much of news flow, especially negative, we could possibly see even 16,500. But then we should remember that whatever is happening is negative globally. But it is not really directly negative for India. I mean, we are having a sentimental effect of the negative news. But then if you look at the banks, I mean, none of this news is going to affect the Indian banking sector at all. And overall, I think the macros also, as far as India is concerned, should see improvement going ahead. So we could possibly see time-wise correction. We could be between 16,500 to 17,500 for a while. When I say a while, possibly next couple of months. And which could also tire out people. But I think it's a great time to get in, buy, hold. If you are able to hold for the next 8 to 9 months post Diwali, I think we should see a decent bull run post that. So, like I said, great time to restructure your portfolios, invest whatever you have, maybe keep about 10% of cash for a possibility of 16,500 and remain invested.
Invested. Okay. So let's talk about specific names. Amrish, hi, afternoon. Balakrishna Industries is something you like. The stock was around 2,400 levels. It sold off after declaring those third quarter numbers, very sharp correction, and now closer to 2,000, just under 2,000 levels. Why do you like this one?
See, I mean, it is the largest off-highway tires, catering to varied sectors like agriculture, industrial, construction, earth-moving, mining, port, and the ATV segments. It sells across, I think, 160 countries, is one of the largest suppliers to global OEMs with network across majorly US, Europe, India, Australia, and Canada. In fact, more than 50% of India's export of off-highway tires is from Balakrishna Industries. Like you said, last quarter was a disappointment because of which we saw a correction because the distributors were sitting on high inventory levels. But I expect that to normalize in this quarter. If you look at the cash position of the company, it's more than 2,000 crores of cash as of 31st December. And carbon black, which is a major input for the tire segment, it's about 22% by value, is actually manufactured in-house by Balakrishna Industries. So, this also improves the margins for them. And now with the crude actually coming to about 15-month low, most of the raw material prices have actually come down quite sharply because most of them are crude derivatives. And that also should, in fact, help them improve margins. And they're expanding capacity from 335,000 metric tons to about 360,000 metric tons. And my expectation for FY25 is an EPS of about 102. And I have a target of about 2550, which is about 22% return from here.
All right, Amrish, finally, before we let you go, Zomato is picking some pace right now. As we speak, at the high point of trade for that one as well. Decent volumes on the stock too. It's recovered about, what, 6.5% from lows. And this at a time where all the other new age companies are not doing too well. You've had views on Zomato in the past. What do you make of them right now?
I was quite negative on Zomato when the IPO came. I was proven wrong for a couple of months. We saw those highs of 170 or something of that sort. And after this correction at closer to 50, in fact, I turned a buyer because at least there's some visibility on, like them being cash positive, EBITDA positive, at least over the next 2 years. And looking at the way the business is growing, I think at 50, 55 rupees, I think it's a decent pick if one is able to hold on possibly for the next year or so. And again, I'm not too negative on the overall that new age space. I also have another pick, which is delivery. Again, the largest in logistics, especially catering to the online commerce. So that also has corrected decently well. So at these levels, I'm a buyer in delivery also with a 12 to 18-month perspective.
Okay, got that, Amrish. Stay on. We'll try and squeeze in some more questions. 10 minutes to go before the day closes out. Quick break. We'll be right back.
Okay, welcome back. Just 7 minutes to go for close. Amrish is still with us, but let's also play some opinion out of Jahangir Aziz of JP Morgan. We caught up with him earlier in the morning, and his view is pretty emphatic. At least on Credit Suisse, his view is that it won't blow things up. Listen in.
I think Credit Suisse for the Swiss government is large enough for it to be backstopped by the government. So I don't really think that you are going to see a failure of that. So clearly equity owners of Credit Suisse will have been already battered by it. But that does not necessarily mean that the credit impact of Credit Suisse is going to be that bad, right? So I'm not saying that there won't be a credit impact. There's clearly likely to be a credit impact, but it will be taken over by the other bigger banks in the European time zone. So I really don't think that this is a crisis, right? If you look at what's happening to the labor market, what you've seen, what happened to the CPI, None of that points to the Fed actually pausing. We do expect the Fed to go 25 in March. We also expect the Fed to follow it up with a 25 in June.
Before the Fed, there is the ECB. Today, in an hour's time, we'll get the decision, and that'll be the first one to go. And it's a mission impossible kind of situation, but we'll see what happens. Amrish, you know, your view is that 17K should, the market should have come to it. We've come to that. Are you expecting a bounce? Do you have any view at all on the index here?
See, like in the short term, we could see some amount of bounce, but I don't see that holding on because it'll get sold into. Because people are clearly stuck at various levels, right from that 18,000 plus levels. So any sort of a bounce back may be utilized by those who are sitting on a lost portfolio to possibly book out. But like I said, I think it's a clear buying opportunity for those who are sitting on cash, and that's what I'm doing right now.
The knock on a couple of metal stocks is pretty clear today. Hindalco is down 5.5%, Tata Steel, JSW Steel. Any final thoughts on metals, Amrish? Obviously, it's global risk aversion that's playing out. But on the ferrous side, a lot of analysts have been telling us that, you know, they're still holding on to hopes of steel price hikes. So what would you advise here?
I think it's only a hope because steel clearly is a global commodity. And with the expected slowdown, I really don't see the steel prices shooting up from here because, like the cycle which we saw coming down about 12 months back, I think that's still in place. So whatever bounce would be temporary, I really don't see a medium to long-term sort of a move for the steel stocks.
Okay, all right, Amrish, we will then wrap it up on that note for today. Thank you very much for joining in. And with that, we'll start the countdown. Well, Prashant, if you see the close right now, you'd imagine nothing's happened in the market. What is it? 20 odd points up, right? It's an absolute nothing sort of a day. But then...
but a lot happened, and I mean, you know, didn't really go anywhere, right? I mean, that's the whole point. But a positive close at least, a positive daily close after, I think, many sessions. This one is a positive. So yesterday was negative, day before was negative. I think Monday was a negative. This week, of course, it's been a negative session. Last Friday, of course, we got that big crack. Thursday was a down day. So I think this is the first positive close after five sessions. Yes, after 5 sessions. This is the first positive daily close. I think we'll take it. Let's just look at the Nifty Bank as well and see where that is. That is also a positive close. Again, after 5 sessions of sharp cuts and negative sort of closes. Futures 17,065 spotted about 17,004 and that's the picture overall that we find ourselves in. I mean, moves actually were pretty random, right? I mean, just think about it. Metals, for example, the index was up 2% yesterday. The index is down 2.5% today. No particular new information, no new reason. FMCG was down 2% yesterday. It is up 2% today. So just reversals even within sectors is what you saw. In terms of individual names, etc., they were, of course, movers both up and down, but difficult to make a coherent sense of what went on in terms of stocks, sectors, etc. A little dislocated overall, like what we're seeing in global markets. Surabhi.
Oh, yes, absolutely. I'll just quickly read out some of the movers and shakers in the broader market. SpiceJet is going home with a nice gain, about 4% on the upside here. Some of the paint stocks have done really well. Asian Paints, obviously, within the larger space. But Berger, Shalimar, beyond the index also, 1 to 2%, 3% higher because of the way in which crude prices have cooled off very significantly. Motherson saw, of course, that block deal, about 3.7% equity changing hands, and one of the promoter entities is a seller. So 10.5% down on that stock. What else stood out? If we are talking about movers on the upside, considering there was some green, then you have an ICICI Prudential because of the management announcement that happened, 6.5% up on that stock. Zomato had a good session, 5% up on Zomato today. A lot of the Adani Group companies, Adani Transmission, Adani Green, they've had some upsides. Ambuja, for instance, is up about 5% as well. DLF finally came out and confirmed what social media told us a couple of days ago, this absolute blowout buying spree in one of their premium high-rise offerings in the NCR region, 4.5% up on DLF as we are closing out. So that's on the upside. Some of the weaker names included Railtel, KPIT. These are stocks that have rallied in the recent past. So on the mid-cap screens, they were slightly cautious and somber. But a big move on consumers. I think that was also the headline. Asian Paints, Lever, Titan, Britannia. You can name lots of stocks, so lots of buying in the consumer part of the market. But Prashant, I think the theatre of action now is the ECB and then the Federal Reserve. So you get your snacks, you get your chai, or whatever else is your poison, whichever beverage. ECB today and then Fed next week.
More like Red Bulls. It's just get this week over with, right? I mean, market's been exhausting for, of course, I mean, those who are trading, but good reporting on it. Wild moves. 40 points on the Nifty finally at close, 17,009. It's a wrap. Thank you very much for watching. But don't go anywhere. Our Thursday special, big deal, comes up next. Stay with us.